Hi, I'm Jeran Van Alphen, Certified Financial Planner and founder of Centered Financial. Welcome to another Ask Jeran. Today we're discussing required minimum distributions and answering the question, when do I need to take an RMD? So first, what is an RMD? An RMD is the minimum amount the IRS requires to be withdrawn from tax-deferred accounts once you reach a certain age. As you save in these accounts for retirement, taxes on your interest, dividends, capital gains are all deferred. However, the government won't allow you to defer taxes forever. At some point, they want to be paid. So your required minimum distribution is when you have to take a withdrawal, pay the taxes, and the government gets their money. Also, just to know, there have been some changes recently with the passage of Secure Act 2.0. So we'll discuss the current rules regarding RMDs. And as you can see, there's a list of common tax-deferred accounts where RMDs apply. Typically, your traditional retirement accounts all have RMDs. However, you'll notice that Roth accounts are all excluded from RMDs. So how is an RMD calculated? It's calculated based on the account balance of your tax-deferred account at the end of the previous year, and then divided by a life expectancy factor. So just so you know, as you get older, that life expectancy factor will increase. And if your account is growing each year, your account balance with market returns, then you should plan on your RMD going up each year as you get older. However, if you're spending your account down, obviously your RMD will decrease. So it's different for everybody, but that's just something to know as you plan ahead. So when do RMDs begin? Well, the Secure Act 2.0 changed the requirements for RMDs. Now, if you were born after 1950, your RMD age is either 73 or even maybe 75, pushed out if you're born after 1960. Just remember that if you are subject to RMDs, the withdrawal has to be made by year end, unless it's your first year. Other timing considerations, you don't have to take an RMD from your company retirement plan if you're still working past your RMD age. However, you do still need to take the RMD from an IRA if you're still working. And also, if you inherit an IRA, there are special rules. So those rules could fill a whole nother video. We'll save that conversation for later. But just know, do your research, because many non-spouse beneficiaries have to fully withdraw money within 10 years, which could lead to tax consequences. So it's important to plan ahead on how IRAs are passed on at death, or if you think you're going to inherit an IRA, to make sure you're aware of how those rules work. So planning ahead is a good idea in general. As you look at your financial plan, just know that RMDs could push your income taxes higher. This is a chart showing how this orange shows the RMD amount. This shows how RMDs could push your total taxable income into another tax bracket, even if you don't need the money. And then that can have a domino effect on other expenses, such as Social Security taxation, capital gains taxation, and increasing your Medicare premiums. So ways to plan ahead, there are several strategies, including Roth conversions, qualified charitable distributions, asset location. It's important to consider your RMD income with respect to your overall financial plan and investment strategy. So make sure to review the advantages and disadvantages of any strategy that you consider and do your homework. So that's it for today. I hope this helps. Please let me know if you have any questions that we can discuss on future videos, and make sure to subscribe to our YouTube channel. So thanks for watching. Also, last thing, just a reminder, this video is for educational purposes only. It's not intended to be investment advice for any individual. If you have questions regarding your specific needs, please consult an advisor. At Centered Financial, we're always happy to schedule a conversation to discuss your specific needs. And for tax or legal advice, please make sure to consult professionals in those respective fields. All right, take care.